yeah, you should, I'm gonna have to text them to the login system. I have a separate. Tweak this.
Yeah.
So I'm sometimes.
They're with us.
I'm
Okay. Good morning, everyone. I'd like to call.
Get Bill.
Okay.
I'll call. Gotta get Bill on. Just give me a second.
Oh, sure. We're gonna wait for Bill.
Good.
Okay, we're gonna wait for Bill.
Let's wait.
Okay.
This is his area.
Yeah.
If we need to take a break, now's the time. Jump. Sure.
Yeah, and if that wasn't the one that you want, whatever the best one that Tom did for you, I'm not sure. I'm not sure if those are much different. There's a format you want to do this in, we're trying to get. And I figured yours was the best, maybe try to.
Mine was pretty comprehensive last one, so now.
Just try to pull it for everybody, like I said, we can do it, we're just trying to get the data. But when you get a chance after the meeting.
Sure.
All right, thank you.
Did I send you the technologies edition update?
Yes, you did. Yeah, it was in the report. Yeah, you did.
It's a bit soft.
There. There we go.
Okay. Good morning, everyone. My name is Anthony Owens. I am the chair of the Finance Committee of the Albany Water Board. I'd like to call the meeting of the Finance Committee to order at 9:10 on Friday, January 25th, 2025. I'd like to start with roll call. Again, my name is Anthony Owens. I am the chair of the Finance Committee. Across the table, all committee members are present. Chuck Holton, Rachel Johnson, Jim Frizzell, Albany Water Board staff, Joe Coffey, the commissioner, Sarah Terrell, HR journalist, Bill Simcoe, deputy commissioner, Ari Islam, senior, forgot about Steve Mercier, our marketing and communications manager. Our outside consultant is Laura Golfo, Ari Islam, our senior accountant, Chris Power, our CFO, Joe Diovini, our water treatment plant manager, and Karen Wilkes, our executive assistant. The first order of business would be the approval of the minutes of April 25th, 2025. They've been circulated and everybody's had an opportunity to see them. Are there any comments? Okay, any corrections? Okay, there being no comments or corrections, I would ask for a motion to approve the Finance Committee minutes as presented and distributed. All in favor? Thank you. So we'll move on. Finance Committee report or Finance report, Chris Bowers. Thank you.
By the way, just added after.
So what?
Just added after that one. Also.
All right, I'm sorry. Please forgive me.
Looking out
All
for
right,
you.
all right, thank you.
All right, well, good morning, everybody. This is the financial report for the month and through June 2025. Just quickly, sort of the verbiage here, revenues collected during June were $3.5 million. And that's spot on. That works out to about $42 million annually. That's basically our budget. We take that certainly every time. In comparison, and it kind of jumps off the page to prior year, there was $1.9 million increase. That coincides, if you recall, in 2024, the issue we had with M&T not depositing our checks in a timely fashion. There was a lockbox issue where people were mailing it in and it wasn't going into our account and was bouncing around M&T Bank itself, or actually getting kicked back to the customer over the series of months. If you remember, it was awful. So you're going to see that number slowly pick up towards the end of the year as we start comparing 25 to 24. But that's real. June is when it started in 2024. Year to date, $20 million. Again, an increase of 3.6 million. Again, some of that timing that I mentioned from month to month. Miscellaneous revenues of almost $10,000, and our relatively recent breakout of penalties and interest period is of $40,000, and year to date $166,000 of penalties and interest. So that's great for us. Expenditures for the period were about equal. We're pretty close, about 582,000 year to date. We have $15.5 million of worth of expenses, $2.1 million increase from last year. Again, this is we're fully ramped up this year. We're actually processing these expenses on time. Things are expensive. Inflation has continued into 25 compared to 24, so we're expecting that, and that's and we budgeted for that.
Chris, a big chunk of that is an increase from the fuel department.
There was about almost $1 million. Yeah, and we expect that to go up again in for 26. So that's something. It's a big cost as part of that. Our capital spend. Next page is for the period was about $1 million. The disbursements we received totaled 564,000. All grants. One for the DEC grant for the land acquisition that Amy holds up. That's 250,000. We segregated that money specifically for the use of the purchase of that land, and then for Beaver Creek and the outgo of some remaining disbursements on those grants there. Budget to actual, pretty spot on revenue year to date, month and year to date expenditures. Again, period, fairly accurate, and then we're under budget. From a budget perspective, that'll catch itself up a little more as we get towards the end of the year by about $4 million. Our .3, our receivables, not age, our overall receivables are $2.3 million. That includes a current bucket. But this is, again, we've of our aged receivables, we've collected the $64,000 of penalties and interest. So they're aged, but they're collected. OGS, St. Peter's, they just pay in 90 days. That's a good receivable, so we'll take it. Those are the ones that we do have to follow up on to make sure that it's more timely. Next page is our actual sort of financial statement here. We're just showing kind of what we read. Nothing jumping off the page here that I haven't talked about. You'll see our debt service near the end. That's higher, as we expected it would be from year to year. On a monthly basis, cumulative, it's actually a bit low. We did have some debt drop off, and there's some timing issues also with our outside debt. our 2021 bonds that kind of make that equal there. So next page, just a comparison of our revenues, and it breaks out our ancillary, our additional cash receipts, which certainly come in handy. It's an additional $221,000 worth of cash that we bring in, have brought in through June on top of our normal operations. And yeah, it's the normal rents, it's the normal permits and things, and every so often we'll get some refunds for taxes or perhaps some shared agreements with other customers where we get some revenue there. Next page is our normal departmental breakdown of costs year to date versus budget versus actual. And you can see versus budget again, we're $4 million over in the middle of the year. That'll start to catch itself up a bit, but we're also, again, we're well ahead on some of our contractual and other expenses that they make up sort of that gap from a perspective of actual. You're comparing, $15 million through June to 2024 of $13.4 million. So again, expenses, they go up. It's just a matter of how much, that's something that we're monitoring. And as we get into the budget process for this year, something we're taking a real close look at. Next page is our capital expenditures. And that you guys have seen before, going back to 1995, almost $200 million since 1995. Our June expenditure, our 8350 accounts that we call them, are $1 million. 2.7 million through June of 2025 are our capital expenditures. That's going to go up a bit as things have ramped up in July. With respect to the Learning Garden fluorides, finishing off some of our work at our Feuerbusch plants with our sort of our outside buildings there. So that we're going to expect that number to increase over the next few months pretty significantly. Next page is our overtime breakdown. And we've discussed it sort of throughout the year, all the numbers of sort of increased numbers of instances we've had there that required overtime. Joe Coffey has talked about it a lot. It's within expectations. We knew it was coming. You'll see that our due from is at $3 million. So that's $3 million that is due to us halfway through the year. So that's obviously a good thing. One, two, it's within our expectations. And then Arif and I have been looking and Bill Kahn have been looking at, we're going to get to a schedule that talks about it, but been looking at this number to make sure that we understand it. Because in our view, it should be going in one direction. We should be owed money virtually every time. I mean, if you looked at 23 or 24, I think we owed the city money. The other one was almost zero. So we were expecting a big receivable, and we hope this number keeps going in the right direction. We're monitoring it monthly, certainly, probably weekly, but we'll get to that in a minute. Large users unpaid balance, $2.3 million. Again, that's our accounts receivable. We're aware of that. Some of our bigger customers pay a little later. So I think we can kind of skip through the aging there. We spoke about that. The next page is just our comparison, our year-to-date comparison for Route 7. Again, very strong. Our normal players, SUNY Polytechnic and OGS, are very strong there without doubt. We have a 15% increase on that year over year. So that that certainly reflects our rate and increased consumption from our major players. Still a few anomalies that we're working out for some of these customers, but for the most part, this is driving the game here and is very strong. And we've still been taking amounts from Bethlehem as well, even when that was assumed that was going to really ramp off, and it has. But there's some good news there, I think.
Are you billing Bethlehem once a month or how often?
We build up front. Bill can address this a little better than me. We have address Bill.
Yeah, we've that's the new thing we're doing with Bethlehem buildings monthly. They pay that upfront amount for that.
Right.
And then, but we're trying to do monthly so that they can see that they have a credit for that. When they actually reduce their minimum. Because we didn't want to wait. Supposedly after they get their minimum, then they're billed on a monthly basis. So that's what we want. We build this on the same basis as other ones, so.
So good news, there's been activity there that I didn't expect. So, okay, next page. Now, this is, we don't do too many new things around here, but this is a new schedule that we've added to the presentation. And what this is, as I was just talking about the due to, due from, you'll see the very bottom right-hand corner. That's the $3 million I was talking about. That's what's owed to us at the end of June. So what this schedule does is encapsulates the entire activity of our due to and due to from account with the city, which has taken us, our in particular, who pulled this together. This it looks like a busy schedule here, and it is, but you have no idea how many numbers are behind the schedule. It's a highly active account, and we've broken this down into some digestible, quasi-understandable categories. You'll see these expenditures here. And so this is everything that's coming against us in this due from account that's being either allocated or as a flat out bill, starting from, payroll all the way through, payments to, to JP Morgan. So this is what our expenses are. When we transfer money in, we have our normal transfer schedule that Bill Kahn helps us pull together. Also, our tax roll ultimately ends up going into this account. And so we don't have too many entries going one way, but we have a lot of entries going at us. Good news is 4 million, our tax roll is about 4 million. That's a big entry, $4 million. That offsets a lot of that. And our normal, as long as our budget is on par and we're not, way under and spending more than our budget, then that should be equal. So that's why we're always confused why we will be owing so much money in our basic math calculations. We're actually putting more in. So we're still working that out. But this was our first step. RF did a great job pulling this just a ton of data together that was very hard to understand, if not put into this format where we could say, okay, now let's get the backup for all of these bills that are coming in. And we did meet with Ken Bennett and Nick Rowley about a month ago before the schedule was, I think we just put the schedule together. And they did send us back up, and a lot of it was, an Excel spreadsheet. It wasn't real. They showed us how they did the calculation, not whether it was accurate or right. And some of these numbers appear pretty large to us. So this is what we're vetting to make sure that we're being charged correctly. And, our view is we should have, again, a very large receivable that we should be able to draw down upon, or at least put less money in our next budget. So we don't want to be receivable, right? So that's our goal, is to get ahead of that. And this is the first step of organizing all that data, which I don't think, as far as I can see, anyone's done in the past or recent past. So it's a lot, and but it's important. There's major dollar figures running through here that affect us on a lot of levels. So we're putting a pretty good emphasis on that, and that's why we're including it in our monthly package here. Next page. This is another schedule that you're familiar with. This is our route comparison. Again, this has been strong, certainly from last month relative to the month before for route 2, 1.4 million compared to 1.3. That's within our our rates. We would expect that to go up, and it did. So that's things that we expect are going in the right direction. That's what we want. So that's been a good story there, on top of our Route 7s, which were, as we noted, was about 15% higher. And so that's all positive. And through the middle part of the year, it showed signs of strength, that we're billing correctly, we're collecting correctly, as opposed to kind of 24 and later 23 when there's a little more ragtag. We're more systematic, more periodic. We're getting bills out on time. We're collecting things on time. That makes it easy to compare things and do management analysis, obviously. So that's good news there, and I think that was it.
Thanks, Chris.
Sure.
Are there any questions? Chris?
Do we have an update on the line of credit?
We do. Is that the next piece there?
It is.
Oh,
No,
okay.
no, it's here. It's here.
Yeah. But budget was the next. Oh, you want to say?
Yeah, just before you go on, I would like to make sure that everybody knows during roll call, I failed to mention that Bill Kahn is online. So go ahead.
Oh, okay. We'll get to line of credit shortly. The next part is the budget process, and we're we're a little delayed. One of these years, we're gonna get this exactly on time, but we're in the beginning stages of towards the middle of putting information together to send out to our department leads like Joe did here. We're also a little delayed where we're trying to make sure that we're not just copying what we did the year before. We have a little time now. Let's put this together and put a real emphasis on budget to actuals, what's really being spent on a departmental level. Sometimes things get combined and TD that maybe shouldn't be, so between our, but we have a couple of decent heads trying to make this digestible to our department heads so we can really get an actual budget that we truly adhere to. Not saying we don't now, but we want to make this a consistent process with Joe, who's essentially been doing it the past, Arv and I were swamped last year, and the year before I wasn't even here. So between all of us, we'll get with Joe and we'll figure out what the right way is to distribute these budgets and get it done. So to me, it's early. It's not even, we're not even the end of July, and we're doing a budget. It's early for me in my professional career, but this is how we do things, and we're working on it, and it's a bit of a process. So I'm not sure if you have anything else to add.
I want to add to that. One of the things that we want to do this year is to kind of ensure that the budget reflects a business plan or strategic plan or approach that we have. So you're going to hear Joe talk later in a regular meeting about some of the planning activities that we're doing this year that we will actually have pretty much wrapping up shortly that will help us put the budget together. I never have liked the concept of taking what we've done last year as a start and just tweaking it. We're zero basing everything. And part of the budget process this year is to ensure that we have more of a department approach to some of our capital and equipment purchasing, et cetera. And that we have less siloing. Everybody's got their own little empire, if you will. That needs to go away. And we're also, I just asked the unit department heads to start doing your performance evaluation, setting goals for next year, and assessing their non-union white collar employees in accordance with this performance rubric that we distribute every year. That'll be used to help us also figure out where we're potentially looking at potential staff additions. But we need to look more collaboratively, working staff across the units, so that everybody having their little area. As we've talked before, we're going to have a lot of pressure, the upward pressure on rates. We want to make sure we are being prudent in that approach, in controlling our expenses, making sure what we have as an expense is needed. We're not going to just have a budget expense if we think we're not going to actually do it. That puts a lot of pressure on. That also impacts our budget transfer that we have to make to the city if we never incur those expenses, like what's going on. So we're going to try to do this a little bit more intelligently this year. But again, it's like Chris says, in my experience, kind of early to be doing budgets for the next year, but that's the way it works here. The way things are done in the Shire.
Yeah, I think managing that budget transfer, we were just kind of throwing, we didn't realize what that kind of was when we first started, at least I did when we first started doing it. The lower that is, the better that is for us.
Yeah.
Cash in the bank, and we got to really vet that a lot better this year. So that's it for the budget. The line of credit, and just to go back in time a little bit, Bank of America, when I joined, was the holder of our line of credit for $4 million. It's actually $4,050,000. We always round it off, but called $4 million that we were able to pay $2 million down in 2024. We haven't touched it since, as our cash. I didn't feel like we had enough accumulation at that point to really pay off the balance of that, which I like. I don't like having lines of credit. I like having it like you like to have it as a backup to your own account, just in case you kind of go over. That's how I view lines of credit. So anyways, but the Bank of America was bad enough to warrant a management comment from our own auditors, so that I can tell you some of the issues that we had with them, and obviously in my head, M&T is a much better fit for us to hold that line of credit, given that they have our lockbox and maintenance accounts and 3 or 4 other accounts. So we had a special session yesterday to approve the resolutions. We've been working, Bill and I, Laura, and Shannon from Hush and Russ have been working the past few weeks. We had a final term sheet that the stuff's all signed. So we're expecting a closing on Monday, for, the line of credit, $4 million, which two would automatically go to pay off the Bank of America. So there'll be $2 million available attached to our operating accounts. We'll have a true overdraft, if you will. We may have to do a little more reporting for it. We do a monthly, probably, I think liquidity report, but outside of that, yeah, that's a big win for us. And it's something you want, I certainly wanted to do from inception. So that's, and similar rates. Last we negotiated the fees out pretty good as well. So it's actually gonna save us a little money, be more convenient, and actually, be relevant given that it's tied to our normal operating accounts. Next item there, forecast we're still working on. This is something we pulled together, RF and I earlier in the months, and when we came up, it's a hard place to do an accurate forecast, and I'll qualify that never, obviously there's a lot of builds going on. We have a lot of CapEx, but weeks get moved, months get moved. Next thing you know, you're not sure when your cash flow is going to be needed. So that's part of it there. Also, we showed you that the schedule with the city are due from, you never know what expenses are going to be covered there or not. So we didn't totally understand it. So we're just, we're doing it. The purpose of this forecast is to forecast the remainder of 2025 and out through 26 to make sure that we have enough cash to operate at the end of 26. We're not blowing it out through 27, but the next year and a half or so, we should probably do a pretty reasonable forecast of what we know. And that's what we're working on. And that's what we're going to rely on between ourselves and Bill Kahn when it comes to setting an accurate rate, or at least knowing what the rate should be. And so once we have our audit over with, we're working on budget. Simultaneously, we're working on this forecast, and that's kind of going to be our focus for the next couple of months, and we'll get you some real answers. So
How are you gonna forecast revenue? Things are happening. The
yeah,
big thing that's gonna impact us is nanotech. They're building buildings, they're gonna start
Yeah.
using a lot more water.
we
Can
kind
you
of almost
get numbers on that?
left that as upside a bit. Like if that happens, that's going to be great. Let's give us the worst case scenario. And we took it. There's a lot of ways. Normally, you would do this on sales. Okay, your sales number is 3.5 million for 1 month. You expect you're going to collect that 2 months from now, and they put that as your cash number. That's the basic way to do it. We did it. We had some seasonality with our actual cash collections given some of the M&T issues last year, but we try to smooth that out a little bit based on cash collections times some rate we think it might be. Is it 5%? Is it so we can toggle it. We can change either like I'd say call it a 5% increase or a 10% increase to see what that scenario is.
Right.
But it's based upon, as of now, actual monthly collections in 2024. And we thought that was conservative as opposed to sales. Because we care about cash. Sales, okay, you're most
So if they go up, it's a windfall.
Chuck,
it's gonna be a windfall, yeah.
Ground truth that.
Yeah.
I have slides and data and the KPIs, which I'll share with you at the full board, that we think now we have pre-COVID, COVID, post-COVID. We think we've got kind of a new normal that we're looking at for 24, 25. That kind of serves as the baseline, if you will. And then from that, we can really do the 80%, 90%, look forward and then figure out what on top of that we're going to need to cover cash and bridge and debt ratios. So we got plenty of data.
Plenty of data, and you're right, but there's certain things, okay, you have, SUNY, that's the hope that goes in that right direction. But you have expense items too. We don't know what the county bill is going to, went up $1 million the year before. Is that going to be 9 million now, 10 million? So, it's not just covering your rate, trying to, to cover your normal operations. You have these ancillary things like the county, other items that just keep going up. So, you try to be conservative and obviously accurate. So that's why we're not disclosing any number. We're working on it. And between myself, RF, and Bill, it's a focus of ours over the next couple of months.
The biggest variable, though, we've always had is the revenue side. That's it's wet, right? We've got some organic growth with nanotech. Some of the larger expense, we got a better sense on. We kind of, Bill works with the county. We got an idea of what they're looking at for their future, the expenses that are going to hit us at the large percent. So, but we have a lot of data.
We do, and we've gotten to a granular level. We know the lowest level of debt payment. We know the lowest level receipts from our rentals. So we have it and we can defend it. And yeah, but again, it's work, and we got to make sure that when we actually disclose it, we can get behind it. We're not totally there yet, but we're getting there.
Go back to the line of credit, I was not sure I got it right.
Sure,
Now we got M&T Bank,
correct.
we got 4 million. But 2 million, 2 million's automatically going to go.
Yeah, we have to pay off
Pay
Bank
off.
of America. Right,
That leaves us 2 million.
that's correct, of availability.
Available right now.
That's right. So,
Required.
no minimum before, yeah, they were trying to.
fix that right
Yeah,
away.
no, we're not doing that. That's our home bank. It's a normal fee that would go in there, but we pay enough money through our normal banking charge to M&T. They do well by us. So luckily I knew M&T has for some reason been my bank for wherever I've worked. I know those guys pretty well, so we threw that right out. And luckily they agreed to it. But
And they're in Albany.
Yeah.
Not
Yes.
Buffalo.
they're Albany, yes, it's an Albany, their finance department.
So,
Yeah.
no more bills to Buffalo.
No, it's not for that. It's they do that, but not that bill.
Oh,
Yeah, they still, Buffalo is still M&T's headquarters, but the guys we negotiated with were Albany guys, and our contact, Matt Hunt, is the main contact there, so.
Chris,
Yes.
Chris, can you hear me? No?
Yes, he can hear you.
Oh, my question is M&T going to be able to have an Albany address on the, for bills?
Yeah, we spoke about that. It got kind of tabled for now, given we had some other report, frankly, there's been some other things going on. So we're gonna address that. The hope that there wasn't gonna be that much confusion, but it's been an issue. People do talk about it, so it's on the list.
Okay, thanks.
Thank
Thank
you.
you.
Are there any more questions of Chris? There being none, we'll move on. Is there any new business to be brought before this committee? Okay, none. Is there any reason for us to enter into executive session? Okay, none. With that being the case, if there's no more business to be brought before this committee, I would ask for a motion to adjourn. Well, I'm sorry, hold on. I forgot to mention, the next meeting is Friday, October 24th, 2025 at 8:30 a.m. If there's no more business to be brought before this committee, I would ask for a motion to adjourn at 9:40. Thank you. Okay, all in favor? Aye, thank you.
Well done. All right.